In market news now, global stocks held steady as investors balanced the inflationary force of rising oil prices with hopes that central banks would not over-tighten monetary policy into a potential recession. Wall Street is closed for the July 4th holidays. Meanwhile, investors are watching out for a mixed bag of economic data ahead of second quarter earnings, while uncertainty remains over the outlook for Fed monetary policy. Locally, Food and Logistics Group RCL flagged a drop in profit in its next annual results as a special levy raised by the South African Sugar Association hurt its sugar business unit. Load shedding bogged down performance, and feed costs in its Rainbow Chicken division could not be recovered. To talk to us about the latest when it comes to the markets, we are joined by Martin Smith, who's a portfolio manager at Anchor Capital. Martin, thank you so much for your time. So let's get into your assessment of market conditions right now, and also the kind of narrative you're getting from the broader market.
Absolutely. So I think locally we've had quite a nice bounce, specifically on the back of very negative sentiment we saw, call it a month or two ago. Also following US markets, which have been very, very positive at an index level. So you've seen a nice bounce in the South African markets. We're in a bit of a holding period at the moment. I think we'll be driven by headlines around inflation and interest rates and the like. And globally, I think we continue to kind of tick up. But again, it's been a handful of stocks that have done that. So we're in an interesting period. And I think the next leg up or down is going to be very much dependent on what happens globally from an inflation perspective.
So we've kicked off the second half of the year, but let's look back at the first half for you. What stood out when you either look at local or global aspects?
Sure. So locally, I think we started the year off very well. And then I think as interest rates started picking up, inflation started picking up, load shedding started picking up, and then obviously we had those stories out of Russia and the like, you saw the local market sort of quite aggressively to, I think, very, very cheap overdone levels, and we've seen a bit of a bounce from here. So a bit of an up and down roller coaster locally, and I think what will happen going forward will very much depend on if we have an outcome that is less bad than the market is pricing in. Offshore, like I mentioned earlier, you've had a handful of big tech stocks really drag their respective indices up there, so that's been very positive from an index level. But at the kind of core holding perspective, most stocks are actually flat on the NASDAQ and on the S&P. So interesting to see where that goes. And I think stock picking is very, very important from here.
When you speak of an outcome that is less bad than what the market is expecting, what is that outcome? Is it that we avoid the recession, or is it something else?
I think most of it is around load shedding, really. I think if you see how that has impacted many of the income statements of many of the companies in South Africa, ads on costs, ads on inflation, that could even go into food inflation. So it's a kind of cycle of higher inflation, worse company results, interest rates might have to go up a little bit more, a more constrained consumer. So it can get into a little bit of a spiral from a negativity perspective from that side of things. But like I said, I think it's mainly around inflation, interest rates. And again, I think the big kicker is load shedding.
So early this morning, we had an interest rate announcement coming out of the central bank in Australia. They've decided to pause interest rates, saying that they believe that inflation has peaked, but they also want to have a look at the lag effect of the cumulative interest rate hikes that we've seen. What's your base case for the July Fed meeting?
So I think you're right there when you talk about lag effects, because often it takes around 6 months for the interest rate effect to kind of come into play into the markets. That's always something to consider. But I think we are nearing the end of interest rate hikes in the States. I think maybe one, maybe two more. So we think that there'll be a 25 basis points hike in the US in the next meeting, just like we think there'll be 25 basis points hike here in South Africa, unfortunately, the next MPC meeting.
Right. So on that note, then, what does the bond market say, especially when we look at the possibility of rates remaining about 5%? Do we still believe that will be the case or not?
No, I think we do. I think we'll see above 5% until about probably halfway through next year. We should start to see some cuts come through towards the beginning of next year. And by the second half of next year, we should be below that 5% mark in the States. So slightly up to go, but then it'll be a little bit of a cutting cycle going down from there. So probably second half of next year below 5.
As we wrap up, how important is earnings season in the US for this particular year?
I think it is always important, but I think also markets, and much like the South African market, I think markets are very forward-looking, specifically in a year where they know that inflation is high, where they know that the consumer is constrained. I think it's about what's happening going forward and how the company's positioned going forward, which I think the market will do. So markets will always look forward in terms of whatever happens, but I think it's especially important that I look through these earnings to answer your question, to see where it's going to go in the year that kind of goes on from here, because we all know that this year is a tough year, but it's about what happens after that.
All right, on that note, let's leave it there. Thank you so much for your time. That is Martin Smith, is a portfolio manager at Anchor Capital, giving us his perspective on what is happening when it comes to the markets at this particular point. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.